When investors sit down to analyze a company, it's incredibly easy to get completely tunnel visioned on the numbers. We look at revenue growth, profit margins, the overall valuation, and we think that tells the whole story. But if you talk to experienced investors, equity research analysts, or institutional fund managers, they usually ask a very different question before they even look at a spreadsheet. They want to know exactly who is running the company. Because at the end of the day, a strong business model is absolutely nothing without capable leadership to actually execute that strategy. Welcome to this explainer. Today, we're going to perform a rigorous corporate governance audit on Indo-MIM Limited. We're going to explore the actual people behind the company, and we'll be doing this relying solely on its official draft red herring prospectus, or DRHP. We're going to break down the board, the management team, and the specific governance frameworks that dictate exactly how this organization operates on a global scale. So if you really want to understand a company's execution capability, you absolutely have to look beyond the balance sheet. When you're evaluating an upcoming initial public offering, it is so tempting to just get lost in those future financial projections. But the human element, that is the actual engine of the enterprise. Think about it. If the leadership lacks experience, if they lack a clear vision, or if they don't have a strict commitment to corporate governance, even the most promising financial metrics can deteriorate incredibly fast. Now, the DRHP is fantastic for this because it provides a highly structured, legally binding disclosure of exactly who holds the power, who oversees the risk, and who is managing the day-to-day operations. By digging into this document, we can build a very clear picture of Indo-MIM's institutional maturity, and we can gauge just how well the company is equipped to protect minority shareholders and drive value over the long term. Okay, here's our roadmap for today's governance audit. 1. Why management matters. 2. The board of directors. 3. Key managerial personnel. 4. Committees and governance. And 5. What investors can learn. Let's get right into it.
Section 1. Why management matters. The human element of business. Corporate governance isn't just some regulatory checkbox to tick off before an IPO. It is literally the fundamental framework that dictates how a company is directed and controlled. It's the system that ensures management is acting in the best interest of the shareholders rather than just pursuing their own personal agendas. While financial statements are great at telling you exactly where a company has been, examining the leadership and governance is what helps you predict where it's capable of going. It's like this. Financial metrics represent the past and the present, for sure, but leadership quality dictates the future, especially when a company operates in a highly technical and incredibly capital-intensive sector like metal injection molding. For a business like that, the management needs a deep, specialized understanding of metallurgy, complex global supply chains, and advanced engineering operations. So the DRHP actually gives us the resumes and the reporting structures we need to evaluate if the current leadership truly possesses these crucial competencies.
Moving on to Section 2, the Board of Directors, the visionaries and oversight.
The Board of Directors acts as the ultimate governing body of any company. They're the ones who establish the vision, oversee the executive management, and make sure there is strict compliance with legal standards. But, and this is a big but, not all directors play the exact same role. The DRHP outlines executive, non-executive, and independent directors. Before we start looking at the specific names on the Indo-MIM board, we really need to understand this definition on the screen. An independent director is a non-executive director who does not have any material or pecuniary relationship with the company, its promoters, or its management. Basically, they don't have a financial conflict of interest. Why does this matter so much? Because independent directors act as the primary safeguard for retail and minority shareholders like you and me. They bring objective oversight, entirely unbiased judgment, and vital external expertise to the boardroom. Without strong independent directors, a board honestly just cannot function as an effective check and balance.
All right, according to the DRHP, Indo-MIM's board consists of exactly 8 directors. And this breakdown brilliantly illustrates a highly balanced governance structure. Exactly 50% of the board is independent. We have 2 executive directors. They're the ones handling the day-to-day operations. Then we have 2 non-independent, non-executive directors who provide strategic input but are linked to the promoter group. And the remaining 4 seats? Those are held by independent directors. This ensures strict compliance with corporate governance requirements under the Companies Act and SEBI listing regulations. It's also worth pointing out that the DRHP highlights that 3 out of these 4 independent directors are women: Sujita Karnad, Rajni Anil Mishra, and Meera Shankar. This brings a significant level of diversity in thought and professional background to the oversight mechanism, which institutional investors always like to see.
Now, let's look at the very top. The prospectus outlines the top executive leadership with absolute clarity. Krishna Chuvakula serves as the chairman and managing director. The DRHP states that he has been associated with the company right from its incorporation back in 1996, so he possesses well over 20 years of hands-on experience in the metal injection molding industry. Alongside him is Krishna Chuvakula Jr., who serves as the whole-time director and chief executive officer. According to the filing, he's been associated with the company since 2004 and has been instrumental in helping expand operations both within India and globally. Now, this distinct separation of roles is a crucial detail. Having one individual acting as the chairman and a totally different individual operating as the CEO is a gold standard structural practice. It actively helps prevent the concentration of executive power in a single individual.
Section 3. Key Managerial Personnel, the operators.
If the board of directors represents the visionaries and the overarching oversight, the key managerial personnel, often called the KMP, are the operators. They are explicitly responsible for the day-to-day execution of the business strategy, the financial health, legal compliance, and the operational efficiency across all those global manufacturing facilities. Branching down from the chairman and CEO, you have critical functional leaders. We're talking about the chief financial officer, the company secretary, and various vice presidents and general managers who oversee specific divisions, like marketing, finance, aerospace solutions, and global operations in places like their U.S. facility, Triax Industries. What this official management organogram from the DRHP tells us is that the company has evolved well beyond a simple, informal founder-led structure. It has developed into a professionally managed, multi-tiered corporate hierarchy that is actually capable of handling complex global logistics.
The filing also explicitly discloses the specific functional leaders who really form the backbone of the company's daily operations. For example, Parasuraman Balasubramanian is the Vice President of Finance and the Chief Financial Officer. He holds credentials from the Institute of Chartered Accountants of India, which is critical for maintaining robust financial controls and managing the company's capital structure. Then there's Santosh Kumar Dash, the company's Secretary and Compliance Officer, whose job is to ensure the firm adheres strictly to all regulatory, secretarial, and legal mandates. Operational growth, on the other hand, is driven by individuals like Manoj Rajmal Kabre, the VP of Marketing, and Sridhar Ramachandran, the VP of the Aerospace Solutions Group, who brings a highly specialized focus to high-value industrial sectors. Seeing these specific roles detailed shows a very clear delegation of authority across different functional domains.
Now, instead of just reading off a list of impressive resumes, it is vital to note exactly how the combined backgrounds of this senior management team directly support the business. Remember, metal injection molding is highly technical. The DRHP notes, for instance, that Sridhar Ramachandran holds a degree in civil engineering from the Indian Institute of Technology Madras and a master's in business administration from the Wharton School. Throughout the DRHP, we see this recurring theme of leadership possessing formal education in mechanical engineering, material science, and business administration. And honestly, this blend of heavy industrial engineering expertise combined with corporate financial acumen is exactly the kind of profile institutional analysts hunt for when they're evaluating a company that relies on advanced manufacturing technologies.
Section 4. Committees and Governance, the lateral oversight.
Here's the reality of corporate governance. A modern corporate board simply does not make all of its decisions in a single, massive meeting. It's just not practical. Instead, they delegate high-risk oversight to specialized subgroups. The DRHP confirms the establishment of 5 essential board committees. We have the Audit Committee, the Nomination and Remuneration Committee, the Stakeholders Relationship Committee, the Corporate Social Responsibility Committee, and the Risk Management Committee. By ensuring that these key committees are predominantly staffed and chaired by independent directors, this governance framework physically prevents the executive management from essentially grading their own homework.
So, let's look at arguably the most crucial one, the mandate of the Audit Committee. The DRHP lists independent director Rajni Anil Mishra as the chairperson of this committee. And make no mistake, the Audit Committee holds immense power. According to its terms of reference, it is responsible for overseeing the company's entire financial reporting process to ensure that the financial statements are correct, sufficient, and credible. Furthermore, it strictly reviews auditor independence, it evaluates internal financial controls, and it aggressively scrutinizes any related party transactions. Having this committee in place provides a massive layer of security for prospective investors. It ensures that the financial data presented to the public hasn't just been handed over by management, but has been heavily audited and vetted by an independent authority.
Another vital piece of the governance puzzle is the Risk Management Committee, which is chaired by independent director Sujitha Karnad. In today's volatile global market, corporate risks go far beyond simple financial losses. The DRHP details that this committee's framework includes identifying internal and external risks specifically faced by the company. It explicitly lists financial, operational, sectoral, and sustainability risks, particularly environmental, social, and governance-related risks, as well as information and cybersecurity risks. The fact that the board has a formal, documented mechanism dedicated to modern threats like cybersecurity and ESG compliance demonstrates a highly proactive and structured approach to business continuity and long-term enterprise survival.
Now, as objective analysts relying strictly on the DRHP, we also have to acknowledge the boundaries of what is actually disclosed. The document provides crystal clear clarity on the current leadership structure, the organogram, and the governance frameworks currently in place today. However, specific long-term succession planning, say outlining exactly who will take over the CEO role or other key technical positions a decade from now, is not explicitly mapped out in the text of this filing. To be fair, this is quite common in these types of legal documents, which focus heavily on the present state and immediate risks. But it is an operational reality that thorough equity researchers will certainly note when they are assessing the company's multi-decade institutional longevity.
Finally, Section 5, What Investors Can Learn, Synthesizing the Data.
So what does this all mean? How do we evaluate the company's institutional maturity using all this data? The goal is to combine these points into a clear checklist to understand corporate behavior. First up, board independence. Indo-MIM meets a robust threshold here, with exactly 50% of its board being independent, providing significant objective oversight. Second, leadership split. The company maintains very distinct roles for the chairman and managing director versus the chief executive officer, which effectively decentralizes executive power. Third, committee leadership. The most critical oversight bodies, specifically the audit and risk management committees, are chaired by independent directors, ensuring unbiased scrutiny of financial and operational risks. And finally, compliance framework. The explicit mandates for handling cybersecurity, ESG, and internal audits show a very modernized approach to corporate governance. Overall, the data presented in the DRHP suggests a highly professionalized structure, which certainly helps build investor confidence in management's capability to execute their business model responsibly over the long term.
All right, we have now thoroughly examined who operates the company day-to-day and who oversees those operators from the boardroom. We've mapped out the executives and the independent directors based strictly on the facts in the DRHP. But there is one final, absolutely critical piece to the puzzle of a company's identity: ultimate ownership. Who actually originated the vision, and what forces truly shape the company's long-term trajectory? Well, in our next explainer, we are going to explore the promoters and promoter groups section of the DRHP. We'll break down the entities and the individuals that hold the foundational equity in Indo-MIM. Until then, keep analyzing the facts and ask yourself this: no matter how good a management team looks on paper, who holds the ultimate power to fire them? See you in the next one.